Hi guys, Amara here. Let's jump right into this video without wasting any time. There are two indicators that I have a good suspicion that a lot of you are not using in your trading. This is a problem because these two indicators are what I call leading indicators. So now, by definition, most indicators that you have on any platform, whether that's TradingView, MetaTrader 4, NinjaTrader, etc., are going to be lagging indicators. Perfect examples are like your moving averages, your RSIs, all that kind of stuff. It's just telling you what price has done in the past and it's showing you in a nice visual format, right? The problem is, how do you account for where to put your stop losses, your take profits whenever you get into a trade? How do you know what makes a good source of support and resistance, right? Most people just scroll back in their charts, go to a higher time frame, draw down lines, all of that kind of good stuff. I much prefer using certain indicators to help our performance and to kind of get us to kind of give us those levels that we are actually looking for. And for that is nothing special, but it's an indicator, and I feel that most of you have actually overlooked it. I did for the longest time, in my trading, but when I added them back onto my charts along with my trading strategy, it really exploded my trading profits. It really helped me to see the charts in a vastly different way, in a better way. So let's jump right into it. The first thing that we have to pull up are what I call pivot points. Now, I know a lot of you might already know what pivot points are. If you don't, let me just quickly pull up this quick image here. Pivot points, in a nutshell, for those of you who don't know, is just a mathematical calculation that happens on the day before, and so these points will actually plot on your charts right at the market open at about that 5 o'clock, like 6 o'clock Eastern Standard Time. So these lines will be there throughout the day. They're not going to change. They will be there plotting basically for you where, according to whatever has happened in the day prior, what is the likelihood of price going to a certain resistance level or a support level. So it's very simple. The S1, S2, S3 levels that you see here are basically support, and the R levels here are resistance. And the deeper that you go into it is the deeper that you are looking at support, and the deeper that you're looking at potential resistance. And then in the middle, you have the pivot point itself, where price can sometimes like bounce off of, or it can essentially be the point where if price is broken below the pivot point, then it will in all likelihood go towards the downside and then towards the upside. Now, of course, in trading, nothing is that guaranteed, but that being said, these levels are just absolutely uncanny. When you put them on your charts, they're absolutely uncanny. For something that takes a second to do, you can visually see these levels. You don't have to calculate them. You don't have to do anything funny gymnastics or drawing lines and like I said, going to a higher time frame and all of that stuff. These lines will stay across the board, like especially using daily pivot points, which is the most widely used form of pivot points. They will stay basically for the whole day. It doesn't matter what time frame that you're looking at. So that's the beauty of these levels over here. And essentially, in a nutshell, what like the way that it can work is, if you see that price is coming into the support level and is finding good amount of support at this level over here, it's starting to bounce up here. You're starting to see that price, according to whatever indicators that you are using, you're starting to see this confluence. Then there's a very, very good shot of price moving to the upside. But even if it doesn't, at least you have a very strong couple of levels here where price has good support, where you can now put your stop losses. Same thing over here. If price goes up over here and then now it's starting to find resistance and it starts to break down these levels, well, then there's a very, very good chance price will revisit the pivot points and possibly even down towards the support levels themselves. So let's jump onto the charts and I'll show you my favorite indicator that I like to use when it comes to pivot points. And that is one that is by this person over here, pivot point standard with middle points. Now, I really like seeing the the middle pivot points, and I'll show you what those are. So to search for this one, you just have to search for pivot point and just type in middle. That one will show up over here, pivot point standard with the middle points. Most pivot points you're going to find are these ones, which don't show you the middle points. The middle points essentially are just by definition just the the line that is between, for example, the pivot point itself and the first resistance. You're going to see the middle point, so this indicator calls it the MR1. Then between the the pivot point and the S1, this indicator calls the MS1. This gives you additional levels where you can potentially find your stop losses, take profits, that type of good stuff. And I really like having these on my charts. It really allows me to kind of see potential take profit zones before they even happen, right? Because that is the advantage of using pivot points. They are a leading indicator where right from the day off, or say right from the start of the day, you will already know where these levels are. And so that's the beauty. So for example, today on the pound yen, you can see how price beautifully was rejected off of the of the R1 level, and then essentially whatever other indicators you're using, you can use them in confluence, and then you could have caught this very nice kind of breakdown in price. And then again, you see how price got rejected off the S1, came all the way down to the S1, got rejected off, closed above the middle, the middle pivots, and then essentially nearly went up to retest that middle, that MR1 level. So this is why these levels are really, really interesting interesting. You see how the day before, price came down to the S1 level, got bounced off of there, essentially, like bounced off the R1. Now, pivot points, because of the mathematical formula, most of the time, just like how a bell curve works, they will be between that R1 and S1 pivot point level. So they're most of the time they're going to hover, price is going to hover between this level over here. You're going to see a lot of price action kind of, essentially going up here, down here, up here, down here. And then when price is very trending very strongly, then you'll see price kind of going up to the R2 and then especially the R3 levels. Once price is up here at these levels or below, like below the S2 and the S3 levels, I really advise you not to take counter trend trades, because that means that price is trying to indicate to you that, hey, something important is happening at these levels. You need to pay attention. I might not be looking for counter trend trades if prices, imagine prices given all this energy, the buyers or sellers are given so much energy to bring you up to these extreme levels, they're not going to give that back really quickly, right? So just wait for the next day or whenever that happens. Let price kind of meander down to the R1 or the S1 levels and then trade around these levels. I think that's a brilliant strategy, and that's what I do with a lot of my trading. And I found that a lot of my successful trading comes from taking these type of trades between these certain levels. So so that's excellent to know. Now, this comes in two different flavors. So here you have the standard pivot point. So let me pull up the settings. Now I really like this indicator because it doesn't have anything. Unlike a lot of the trading view indicators, which have like 1,000 inputs, I'm just like, listen, dude, just give me a few things that I need to like adjust, and it should work out the box. And this one does the exact same thing. You don't have to change a thing. Automatically, this will choose the higher time frame, will be the 1 day, and that is the traditional pivot point calculation that nearly across the board, nearly everyone uses. You could change it to the weekly or daily for if you are a swing trader and you're trading the higher time frames. But for the most part, if you are an intraday trader, then the 1 day will be just fine. And then the other version that it comes in is that it comes in many different versions of calculations. But the other one that's very useful is what is called the Fibonacci pivot point alerts, or just the Fibonacci pivot points. And it uses a slightly different calculation than the standard. But to find this one, I just like using, if you start typing Fibonacci pivot points, I like the one by Quant Nomad over here called Fibonacci pivot point alerts. And then if you just use these ones, like this indicator is works exactly the same way, R1, R2. I'm going to pull up the other indicator also at the same time, and you're going to see the confluence. So you can see sometimes the indicators will differ, and sometimes they will merge, especially at the points where both of these indicators are telling you the exact same thing. For example, they're going to support and resistance levels. That is when they are at their most strongest, especially when you see like the double confluence events here. Like for example, one might be R1, the other might be R2. One might be R1, R2. Like for example, over here, that is when you're going to see a lot of confluence and a lot of good support and resistance trades, and you can take those really kind of like those higher risk to reward ratio trades, as I mentioned in my trading before. And I'll definitely link those videos over here. If you want to pass your funded trading challenges, if you want to get funded as a trader, you absolutely need to aim for those 1 to 3, 1 to 4, 1 to 5, ideally like a type of risk to reward type of trades. Even if it's 1 to 2, 1 to 2.5, brilliant. Get up to those type of like risk to reward levels in your trading, and it will transform the way that you're able to pass your funded challenges and hopefully stay funded. And using these two indicators, these are one of the most widely overlooked indicators because they come pretty much standard across the board. Luckily you have them on TradingView. Now I do like to use the ones on MetaTrader 4, and I'll make a separate video for all my favorite MetaTrader 4 indicators. And I'll tell you exactly kind of how those work as well. It's very, very similar to these ones. But I like to use a double confluence between what is MetaTrader 4 telling me, what is TradingView telling me. Because I'm getting live data on on my MT4 from from the actual broker itself. It kind of gives me additional kind of confluence when I see kind of prices being rejected off of these levels. I'm going so if I want to take a short or or a long trade based on my trading strategy. So that being said, add these two indicators to your trading strategy, whatever you're using. It will drastically, I'm sure, change the way that you look at stop losses, take profits, all of that kind of good stuff. If you are looking for a great broker or brokers, whether you're in Canada or the US, check out my description below. I've gone through and vetted a whole bunch of brokers, and these ones work very well. If you're looking for funded brokers, same principle, just check out my description. And these are the ones that I've gotten funded with, got paid with, or the ones that are doing very well at the moment as well. So take a look, and if you have any questions, please leave me comments. Love reading them. Send me an email. So my email address will again be in the description box below. Otherwise, happy trading, happy trails. Tomorrow's Friday, so it's the last day of the week. At least when I'm making this video. Definitely plug these indicators up, use them, and let me know how they go. Thank you, and I will see you in my next video. Thanks.